Good afternoon, everyone, and welcome to this presentation of Wavestone's Q2 2025-26 fiscal year revenue. I am Blandine Lesvenant, Financial Communications Officer at Wavestone, and today I'm pleased to welcome the co-founder and CEO of Wavestone, Pascal Ambert, and the CFO of Wavestone, Laurence Toupy, accompanied by Karsten Opner, Deputy CEO of Wavestone, who will participate in the Q&A session. Hello to the three of you.
Hello, Blandine. Hello to all.
Hello. Hi, good afternoon.
And with that, Laurent, the floor is yours.
Thank you, Blandine. In Q2 2025-2026, Wavestone generated consolidated revenue of 226.4 million euros, marking a slight increase of 0.4% compared with Q2 of the previous fiscal year. Just to remind you, Wevu has been consolidated since June 1st, 2025. At constant scope and forex, Q2 revenue was almost stable, despite an unfavorable working day impact of -1.1%. Over the whole of H1, consolidated revenue stood at 458.1 million euros, stable compared with H1 of the previous year. On an organic basis, there is a slight decrease of 0.5%. Over H1, the working day impact was unfavorable at -0.9%. Now let's review our operating metrics. Although the utilization rate slightly increased from the first to the second quarter, it was under pressure throughout H1, standing at 71% compared to 73% over the previous fiscal year. At mid-year, the average daily rate stayed strong at 939 euros, despite the consolidation of Wevu, whose pricing is lower than the rest of the firm. The average daily rate remains stable compared with the previous year. At constant scope and forex, it increased by 1% compared with last year. Regarding business development, the order book was about 3.6 months of work at the end of September, compared with 4.2 months at the end of March. It remains close to its position on September 30th, 2024, which was 3.7 months. About human resources, at the end of September, the staff turnover rate was 13% on a rolling 12-month basis, compared with 12% at the end of March. Wavestone had 6,042 employees at the end of September, compared with 6,076 6 months earlier. It includes 98 employees coming from the acquisition of Wevu. This moderate decline in staff headcount is in line with the usual seasonality. Let's now discuss the market environment, and for that, I'm now going to hand over to Pascal.
Thank you, Laurent. The market environment was demanding during the first half of the fiscal year. Our clients have been particularly cautious in their investment decisions within a context of high geopolitical and economic uncertainty. From a sectoral perspective, banking, retail, and automotive remain challenging. Moreover, transport slowed down during the first half of the year. On a more positive note, the outlook appears to be improving in the luxury sector. The insurance sector, for its part, remains resilient, while energy and the life sciences sector continue to show good momentum. In terms of topics, unsurprisingly, the demand for consulting services on artificial intelligence continues to grow, driven by first large-scale deployments among some major clients. We have continued our commercial investment in that field, and our ambition is more than ever to position Wavestone as a key player for AI-driven transformations. To be noted, beyond AI, demand remains robust on cybersecurity, cloud, and SAP. From a geographical standpoint, all regions where Wavestone operates are facing the overall changing market conditions I just described, with the exception of North America, where demand continues to be extremely strong. So in this context, let's now move to our outlook. The beginning of the third quarter marks a turning point with a clear improvement in demand, an improvement that will result in a significant increase in the utilization rate for the quarter. However, visibility remains limited, and it is still too early to determine whether this positive trend in Q3 will continue in the fourth quarter. In this context, we are maintaining a moderate pace of recruitment, aiming for only a very limited increase in our total headcount over the fiscal year. Regarding our annual objectives, we confirm our target of positive organic growth for the 25-26 fiscal year. In terms of profitability, given the changing conditions in the first half and the lack of visibility that still exists for the fourth quarter, we are slightly adjusting our target. We now aim for a recurring annual operating margin of around 13%, instead of our initial target that was above 13%. These objectives are at constant exchange rates, and they exclude Wevu or any new acquisitions. Looking ahead, our next financial communication related to our full year results, our full results for the first half, is scheduled for December the 2nd. We are looking forward to talking to you then, and in the meantime, we wish you a very good weekend.
Thank you very much.
Thank you.
Have a good weekend. Bye-bye.
Bye.
Goodbye.
Thank you.